And the market is open. How you doing, friends? This is Ernie with Zero DTE, Zero Dash DTE. Never forget that dash, because that dash means everything in this particular strategy. Without the dash, you definitely have some trash. But with the dash, you're set to go. I'm sitting here trying to adjust my lighting to try to compensate for the fact that I am burnt to a crisp. Yes, this is my Christmas look, I guess. So I'm wondering if I put on something other, maybe if I go red in the background or something like that, then it doesn't look so bad, I don't have that contrast. We'll try that. Okay, so we're here to do the morning analysis. Every week, every Monday, we do a clean slate volume profile analysis so that we can get a feel for where the market structure lies and address where the market is. And let me just preface this by saying that we are in the midst of a bear market rally. Now, some people think that that rally is maybe an indication of a bottom being put in and that we're going to somehow miraculously have a soft landing and avoid a recession. Even the Fed gives that possibility only a 1% probability. The Fed. And if they're saying 1%, then you know that it's a 100% absolutely not a possibility that we're going to receive a soft landing, that it's going to be way worse than they ever thought. And they're just, I guess that's a little bit of CYA, a 1% CYA. So, there's, no matter how high we go, we are eventually going to top out and then come down much lower than our previous low. Now, most bear markets or recessions end up in on average, about a 35% drop. Now, we're only at, we were down to as much as 23%. Now we're up around 17%, I believe. So we're only halfway there on average. Now, if you were to consider this average, then you would have to say that, then the conditions right now must be somewhat better than the 2001 dot-com bubble burst, or even the great crash of 2008, right? But in fact, the conditions now are much worse than both of those, and particularly the great crash. Because we not only have a real estate and mortgage bubble, but we have a bubble in consumer credit and everything. Everything across the board is a bubble. So, yeah. So we have that to look forward to. But anyways, these bear market rallies, they tend to be quite strong, and as is this one. Now, the interesting thing that happened, and I'm going to go right to the chart so that we can be talking about that. You don't want to look at my face, my red face. Let's look at the charts. All right. So this is a 3-minute chart. It's showing the action that has happened over the weekend. Of course, this is the futures, S&P futures. The futures open on Sunday evening. So Sunday was the 26th, and you can see down here the 26th right there. All right, so I'll put a little horizontal line to mark that. I'm sorry, vertical line. Horizontal. All right. And so you can see that when the market opened up just before on Friday, you can see that we had this incredible run up right at the end of the day. And if you can go back to my videos on end of day Friday, you'll see how we handled that. And that was a fantastic day for us in the service. And then it gave up a little bit and then came back up. And then on Sunday, we had some weakness and then what looked like an attempt to break out of this volume node and into this big volume well here. And that's pretty significant. And that happened on Sunday night. And then all the way until Monday morning, or this morning, this would be 12 midnight, we had some more weakness until we got to the European Open at 3 a.m. And then it again attempted to break out into this volume well. And if it breaks out into this volume well and gets some head of steam, then it's going to go up pretty far. But since then, we've been selling off. And as the market just opened, you can see here it's selling off even further. All right. And I had created two different scenarios. And one of the scenarios was this, taking into consideration the possibility of a breakout into this volume well. I call this scenario number one, up to this LVN, a low volume node, and then possibly going a little bit further, but never quite reaching the other volume node up here, the other T2, I guess it would be, and then coming back down to here. That was my first scenario, given these first two attempts, right? My second scenario would be to stay inside of this volume node and move down, perhaps join up with this child node here and then move back up here. I don't think that we're quite ready to give up this this bear market rally, but I don't think it has much more legs to it either, particularly looking at this. Although earlier on in the rally, we did have a little bit of consolidation as well. So it's possible. It is definitely possible. Let's take a look. We'll go back a little bit. And we're going to do the analysis very, very soon. But right here, you can see that when we initially started it, this also started in an overnight session, gave up right into the European Open, and then screamed up. And then for our open, we consolidated. We gave a little bit back on this day, on the 23rd, and then moved up on the 24th, 25th, 26th, 27th, 26th into Friday. So the 25th and the 26th were just, screaming upward. All right. So it's possible that we're going to do something like we did here on the 23rd and a little bit of a consolidation right here. And that's what I'm showing on S2. Now, T0, we mark all of our volume nodes with T's. I guess you could say that that's a target. Volume nodes have gravitas to them, so price tends to be attracted to a volume node. You may say, well, there's no volume node here, Ernie. How can you say that's a volume node? And we're going to see that as we go and reconstruct our volume profile, and we're going to do that now. So the first thing I do is I go way back out. And I want to see all the volume. I want to see it all. Give it to me. I want to see all the volume, go all the way back a year and a half and see everything so that I can really see these volume nodes in as much clarity as possible. All right? And we're going to get rid of all this stuff and then remark it all up. I do this once a week, every week, so that we can get a clear view of what's going on. And also for the benefit of new members so that they can see how this is all done. Let's see. Maybe first we say hello to some people here. We got, we have Will Do. How you doing, man? And Les and Hervin. Thank you all for coming. Craig, Jamie, Don's group, JC, and I'm sure there are many others. Thank you very much for joining me this morning. All right. So why do we? Sorry, Mike. Can't forget Mike. So why do we do this whole volume profile thing? All right. Rich is here too. Why do we do this whole volume profile thing? Because it's the basis of everything that we do, at least from a trading point of view. The basis, or I should say that the basis of everything that we do revolves around our process and the entire system. We are process obsessed. We are not outcome focused. We are focused on the process, and the process is everything. We take a professional approach to our trading, right? So the very first thing that we need to do in our trading is we need to determine where the market structure is. Once we've determined the market structure, we will then continually update it throughout the week. And then each morning we will determine through a macroeconomic analysis, a geo-macroeconomic analysis, what energies are coming into the market. And once we understand what those energies are, we can create a bias, right? So here, let me so you can look at my red face. We create a bias. We want a directional bias, or a directional vector, I call it. That directional vector, if you know anything about vector math or physics, a vector has direction and magnitude. So in other words, the market is going in a particular direction and has a certain amount of energy or force behind it. Then we take that and we put it on top of the market structure, which is really, you can think of that as sort of a physical entity, almost like a topographical map, right? That has hills and valleys and so forth. The valleys tend to be slick and the hills tend to have some gravitas to them. And so then we put the vector on top of that, and we can create scenarios of where we think price is likely to go, given that behavior that we expect to happen once something traverses that market structure. Hopefully that is clear. That's essentially what we do. Once we've created the scenarios, we can then model an options trade using the advantage that we have being at a 0 DTE, and it's the last day of expiration. Premium is decaying at its most rapid amount. That means that if we put on a premium collection device, that premium is going to be expanding rather rapidly. And of course, we have to take into consideration things like implied volatility. Is it rising? Is it falling? And that will all work into our plan. We also look at some volumetric analysis and taking a look at the options chain and so on. And this is serious analysis, but it all starts with the volume profile, and that's what I'm about to do right now. So the first thing that I do is I get rid of the old volume profile. And that's pretty easy to do. We just go over and we say remove drawings. There we are. There we go. We have a nice clean map or price map showing us going. Now I want to make sure that I get all of this stuff behind our current price, because all of that is going to be significant. It will, now see, if I didn't have that, if I just had this, right, I don't really have much to work with, do I? I have what appears to be 3 volume nodes that have more or less overlapped the existing volume nodes, because there is, like I said, there's still some gravitas with those, so it has sort of retraced them and re-emphasized them. But I want to see the full power of those nodes, and I want to identify where all the wells are. Those are the things in between the nodes. So that's why we get all of the data, right? There we go. Now that gives us a more complete picture. So the first thing that we do is we want to pick off the primary nodes of interest. And what I mean by that is, where are the volume nodes that are closest to current price and where price is likely to go, given some sort of random walk idea. Price can go up, it can go down. So I'm most interested in the nodes that are near price, above it, and below it. Okay, so that's the first thing I do. And I do that by, now this is a very important thing right here. We use rectangles, and we will encapsulate that node. Now, the important part about encapsulating that node is the top and bottom of that rectangle, and that it is situated at the greatest, I guess you could say the steepest incline of that node, right? Because that is the point. That is the point, or approximately within a point or two, where that node is going to be defended above and below. That's support above, resistance below. Inside, the same thing. The bottom part is then support and the top part is resistance. Those are lines of demarcation. Inside the node, we can consider that a target. And in this particular case, because it is closest to our price, we're going to call that T0. We call our targets T's. And the reason for that is just so that we can have a talking reference when we're inside of our Discord and doing analysis throughout the week. So we will call that T0. We'll create a T0. T0. And then just put that right there. Then the next biggest node would be this guy up here. And we'll also, now it looks a lot thicker, but it's not as thick as you might think. I would say that, it's probably something like this. I'm gonna put it right here. I mean, there might be something to this, but we'll take that into consideration when we zoom in a little bit. And we'll call that one T1 because I think that is perhaps the next node, but I'm not sure. I think it's kind of a tie between that one and this one down here. But I'm going to call it T1. I'm going to make the size of it a little bit smaller because I don't think it has the same kind of gravitas as T0. We may never reach it. We might, we may not. And I bring it all the way out to the left so that I can see what price action had caused the majority of that node, right? So, all right. And then we have one more primary node, I think, but that's kind of like up in the air. Is this a primary node? I think this one down here is a primary node, but I'm hesitant to call that a T3. I think the next node to reach is probably this one right here. And we'll create that one. All right. So these are all what I would call parent nodes. And we'll call this one T0. I'm sorry, T2. It is the third most likely, I think, to reach. And maybe make it just a tiny bit smaller. So you see I'm using weight, size, etc. to kind of give me a hint. Because I'm going to be zooming in on this, and I'm going to then be able to see these major nodes, and they're going to be significant to me. So the next thing I want to do is I want to pull off what I believe are the LVNs, the low volume nodes. They are also equally as significant from an analysis point of view as the volume nodes. They are the absence of volume. And they represent, we'll go to, and we'll use horizontal rays for that. And we color them green typically. But we go to the lowest points, right? So that's definitely the lowest point, right about there. And then there, that might be a little bit, okay, that's good. And there's another one right about here. Right? And then, of course, below that, we have a couple. And this one that's just pretty close, and it's almost, is that part of the node, or is that a volume well? But I'm going to say that it's actually a volume well, but I'm going to mark that off too. Of course, it will look a lot bigger when we get into it. Let's say that there's another one in between here. These will be significant as we zoom in because you'll see that price is kind of respecting these volume wells, or these LVNs. All right, so the next thing that we'll do is we'll mark off where the volume wells are. We'll call this one volume well number 1. All right. And then the big one down below, we'll call that volume well number 2. And it's quite big. It's expansive, right? One might say, well, is this a volume well, or is this the volume well, or is this whole thing the volume well? I think the whole thing is. And the reason why I think that is that it's so big and so deplete of volume, we could have a big day where we move through this entire thing. And while these things provide, these child nodes may provide some gravitas to them, I think once you get below T0, well, maybe T2, and maybe we'll call this T3 down here. That's what we'll do, just for consistency's sake. I don't think there's a good chance that we'll get down to T3. There we go. Call that T3. We'll make that non-bold. I'm sure that we're going to eventually be visiting T3, by the way. All right. So there we go. There's our basic volume profile analysis. Let's put on some of these LVNs down here, because these will also be significant if we get down there. It could happen this week. Could. Each of them are going to provide a level of significance as price moves towards them. All right. There we go. Now the next thing to do is to zoom in a bit so we can actually see it. We usually work in the 15-minute time frame or less. Time frame isn't important. Really, it's just the range of time that's important to us. All right, so now we can see our, well, see, it's hard to see the T's, so I'm going to zoom back out and put them close to price. So let's like move them right in line with price. The scale is just too big for us to see, so we'll move them right near price. And we'll do the same thing with the volume wells. So as we go and zoom in, we can see all those things. So there's T2. There, T0 is way over here. It's funny how the scale works. All right. Yeah, and there's the volume well. Whoop. You can almost say the volume well starts here. No, it's right here. All right. And you can make a little adjustment here. You can usually tell where the LVN really is based on what has happened at that point. You'll see that it provides support and resistance. You can see that right here and here. You can see here there was an inflection point when we were moving through this depletion of volume, and it stopped, somewhere around here. So, the actual point is hard when you're in the day time frame to see it because of the distortion of the map. But that's probably where we're at. And all right. And so I just want to then put in my original scenarios that I had. That original scenario said that it's likely that we come down to here, and then I don't even think I went that far. I said we would come down to here and probably stay inside of this T. And then the other scenario was going up this way. Right? But this one doesn't look like it's going to pan out. But it does look like this guy's going to pan out, or something close to it. So once we have these in here, we can then start planning a trade. But anyways, here we are. That's it for now. We have our structural map now all set up, and we'll use this for the rest of the week. We'll add to it and modify it, annotate it, etc. throughout the week so that we can get a better feel for it. And then once we're done with it at the end of the week, we'll start this process all over again next Monday. So there you go. Let's see. Stock packs. Do I need to apply for margin if I am deploying a butterfly? Well, yeah, because options require margin. All right. How you doing, Juan? First time for Juan. He's a new member. Okay. So that's it. Let's go back to the big head, the big red head. So there we go. We've completed our volumetric analysis, our market structure is what we like to call it, and we will use that throughout the week. And I will provide a new analysis every morning that will include the geo-macroeconomic analysis, so we can come up with the bias, our directional vector, which is direction and magnitude. We will apply that against the market structure that I've built here, and then we'll continually modify because there might be some new child nodes or local nodes that get developed, new features in the volume profile, and we might update that a little bit just to get it's kind of like tweaking, and then we will model those scenarios with trades that take advantage of the zero DTE characteristics. So there you go. Thanks, Brian. Calls me Lobster Man. I'm going to have to figure out the lighting here to compensate for the redness. Right? But anyways, thank you all for joining me. And now it's time to get back to work. Typically, we wait for the market to sort of play out in the morning, get that morning volatility out of the way, and we'll see if there's a trade to be made, probably mid to late morning, and then see what we can do with that. And of course, I will have our final hour trade on this afternoon, starting at 3:15. So join us there, and I will be talking about possibly a final hour trade. Of course, that is an experiment. That's something that we are curating as an alternate process in our overall process, trying to come up with new variations of the strategy. And right now I'm on about trade 42, I believe, of that curation. Can you imagine that? I am planning on going through 100 trades before I decide to actually put that into as part of one of our primary strategies. So 100 trades that we're going to make where we collect data in a variety of different markets so that we can determine whether or not this is something that we want to include into our overall system. Take note of that, right? Take note of that. We do not just find a strategy, plop it in, and start trading it and saying that's ours. No. We take a scientific approach to this. We not only scientific, but real world trading with it, with real money, no back testing, because back testing is telling you what happened in the past. It does not tell you what happens in the future. We want to learn everything that we can about how we react to things in the present. And then if we can come up with some good parameters around that trade, and we think that it's something that has the kind of risk to reward that we like, and it will produce a positive outcome in the long term, we will then include it in our basket of strategies that are inside of our system. All right. Okay, we have a suggestion here. Put a white piece of paper behind you and see if that helps reset the balance. No, it has nothing to do with white balance. It has nothing to do with maybe red balance. I think what I need to do is, I suppose I could try that, But look, I have the cameras that I have around here are like super expensive. They're showing you exactly what you see here. Trust me on that one. All right. Technicals aside, if you look at the final trading day of the end of the quarter, there is a major surge, except this Friday. Okay. Technicals aside, if you look at the final trading day of the end of the quarter, there is a major surge. Okay, so, you might say that it was the quarter. Whether it is or it isn't is of real no consequence to us. The surge is there. It is another bear market rally. To me, this rally is no different than any of the other rallies because they happened and there was no end of quarter. So it's, maybe it was because of the end of quarter, maybe because it was quadruple witching. I don't know. I don't really care. All I care is that it's gone up. We can make money on it going up. We can make money on it going down. It doesn't matter. Just as long as we understand where it's going and what its vector is. And then what is the underlying structure and our strategy that we're going to apply and blah, 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 blah. Process, process, process. Yeah, thanks, Alan. I do know that they have something called sunscreen. I got there. The wife dropped me off at the beach. She was going to go then bike ride and then rejoin me. And I thought she took the sunscreen with her. But little did I know that she actually threw it into the back of my... I have one of those backpack type of lawn chairs, beach chairs. And she had thrown it in back there. Had I known it was there, I would have applied it. My first day out at the beach this year. So thanks for all your help, guys and gals. All right. So that's it. That's it for the analysis. Thank you very much. Peace. We'll see you this afternoon. Take care. Brian, stop it. All right. Take care. Peace.